Good morning. We'll be starting in a second. Hope everybody had a great weekend. Let's just share the screen here. And I believe I have the CC closed captions on today. Sorry about that last week. I forgot about that. Oh, my dogs are going crazy again. I'm so happy you guys can't hear them. They're really, really loud and obnoxious. All right, let's put the camera on and say hello to everybody. Hopefully you guys could hear me okay. Good morning, everybody. Happy Monday. Happy Monday. Welcome, welcome, welcome. Carlos got me some T-shirts. I'll be previewing them this week. But this one is Money Grows on Charts. And that's a very, very true statement. Money grows on charts. Carlos, I'll be wearing the T-shirts this week. I want to thank you again. Very, very nice of Carlos. He sent me and Matt some T-shirts, several T-shirts actually. So I'll be previewing them. Um, I'll be previewing them this week. Thank you, Carlos. I love the T-shirts. I love wearing T-shirts to work. I hate wearing suits to work. All right, let's say hello to everybody, and then let's start our business. We got Rihanna, we got Cifazio, we got Steven, we got Manuel. Omar, hey Omar, I hope you had a good weekend. Sorry about your fall, man. There's something going on. You fell. I think Penny had a little accident. I'm so sorry about this. There's something in the air, you know. I hope speedy recovery, Omar, and I hope you get better. And remember, anything physical can impact you psychologically. And when you're impacted psychologically, you have to reduce position size. Okay? You've got to reduce position size. You be smart. And I know you are. Thank you, Omar. Manuel, Stephen, Javad, Yuri, Gregory, Stacy, Arnolfo, Vertuvian, Cheese Great Trader, Ivano, Dragon Don is here. I responded to your email last night, Don. Mark, Tom, Robert, David, James, Chad, Dave, Jean. Good morning, Jean. Love those Facebook cat emails you send me. They're fantastic. Solaire, Jeff is here. Good morning, Jeff. Good to see you. Hope you had a great weekend. Eduardo, John, Greg, Moondog is in the house. Bill, Bugs. Good morning, Bugs. I hope you're doing well. Hope you had a good weekend. I got a lot of small caps today, actually, that have potential. I got 1, 2, 3, 4, 5. So we may have some interesting stuff going on today. Lydia, Victor, Mary, Clay, George, Angie. Good morning, Angie. We got Richard Skinner. We got a lot of Richards here, so I'm using last names. We got Richard Skinner here. We got Wade. We got Kathy. We got Beam Clay. We got Wesley. Wesley, it should start cooling off in Las Vegas now. The weather should start being beautiful between now and, and next summer, actually. JB, CJ, Robert, Joel, Kevin, Pete, John, Kevin, Junior. Junior is in the house. Illinois grain farmer. Jesse, Dave, Gregory. Good morning, Gregory. Thank you for that wonderful email you sent me last week. And congratulations. Great job, Gregory. Great job. If you guys don't know what I'm talking about, check the Telegram channel. I posted it over the weekend. Gregory turned his account into over 500,000. Congratulations, Gregory. Rick, Richard, good morning, Richard. Hope you had a wonderful, wonderful, restful weekend. Frank, just Jen, Whitco, Brian, John, Ray, Kurt, Matt, Genevieve, Steve, John, Sandra, Harold, Brian, Jill. Good morning, Jill. Good to see you here. Good morning, Harold, Brian, Sandra, John. Good to see everybody. Peanuts in the house. Timothy, Cam, Don, Richard Feinberg, Barry, Brian, Lewis. Let's see. We got a lot of people here. I lost my track. That's where I run into trouble. All right, let's see. We got okay, here we go. We got oh boy, we got a lot of people here. We got Brian Lewis, Brian Delroy, Next Gen. Good, Omar. Glad to hear that. Kevin, Jody, Walt, Becky, Hopium, Peter. Good morning, Peter. RP from Spain. J Fremix. Lori, Brian, Carlos. Good morning, Carlos. Next Gen, Ralph, Sassy Trainer, Ira, Charlie Clyde is here. Dave, Michael, Brian, Richard, Delmastos here. Deanna, Kirk, William. Good morning, William. Eagle Beagle is here. Yeah, that was a pretty cool speech yesterday. Bob, William, Gordon, James, Carrie. Good morning, Bob. I hope you had a good weekend. Ooh, look at that. 300 people in 3 minutes. Double O Seven is here. PI Double O Seven. Mitch is here. Scotty, Duzzy, Dave, Alpha Diaz, Jay Blazer, Julio, Waterford, Naples fan, Mark, Dave, Edward, Shamens, uh, Kevin, Henry, Bob, Wesley, Michelle is here. Hey, Michelle, how are you? Eduardo, Bob, Wesley, Terrence, Carlos, Expedition, Santiago. Hey, Santiago, I haven't seen you last week. How are you? Omar, Mark, Next Gen, Shamens, Mary, John. Good morning. And if I miss somebody, I apologize. There's a lot of people here, and I'm just trying to say hello to everybody. Good morning. Also, let's say good morning to Cam and Gustavo. Good morning, Cam and Gustavo and Raleigh. Good morning, everybody. Good morning. All right, business first. Let me take care of this. I have a lot to talk about today, so I'm going to go a little faster than I usually do. It's for your own benefit. Trust me on this. Here's the link to the VIP room. We are going to have a lot of fun in the VIP room today. Let me tell you what we're going to do. Here's the link. In the VIP room today, I'm going to talk about day trading, psychology of day trading, why folks find it very hard to day trade versus swing trade. Some folks, what is Trading Zone Live? What do we do in it? What indicators we use and how they work? Examples of setups used in Trading Zone Live. What is VOLD? Market internals. Let me write that in here. Market internals, and how to start day trading with a very small account and not have to worry about the $25,000 requirement. And there may be something that I'm forgetting that I asked Raleigh to remind me of from last week. So we have a full agenda. Here's the link one more time. And folks, if you're getting set up, if you have questions, Customer Service Live has answers. Matter of fact, I've been getting a lot of really good emails about Customer Service Live last couple of weeks. They've been very, very helpful to everybody, okay? So please take advantage of these people. Take advantage of their generosity and their knowledge, and please join Customer Service Live and my VIP room. I think we typically get over 650, 700 people in the morning show and the VIP room. Okay, let's begin. So I'm going to start off with the small caps, as I usually do. If we have some more that people have, they can give them to us. Here, focus on. So we got AGRI at 1150. We got Box L at 760, 770. And remember, no action till the actual session starts. The actual session has to start at 9:30 Eastern, and these stocks have to trade above that level. MBX, MBX. Wow, this stock. So folks, when I called this stock earlier today, it was at $15.20. It was right here. Since the last half hour, the stock has gone from 15 all the way to 28. We're still going to keep it on our list, okay? 28.50 now. It's not 15.20. It's now 28.50, okay? 28.50. Sorry about that. It is what it is. QLGN, this stock at 13.50. And lastly, ARBB at 10.70, okay? I have already changed the VWAP. We will be talking about them. Okay. We will be talking about the VWAP. So yeah, I got AGRI, Box L, MBX, QLGN, and ARBB. If somebody can post them here for everybody, that would be fantastic. Okay. Thank you. So let's continue. Again, as I mentioned, this MBX, this thing was right here when I wrote it this morning. It was at 520 and it ran up, but it is what it is. We can't control that. Hey, Ron, good morning to you. Yeah, also everybody, folks, I might as well just tell you right now, the VWAP, this VWAP, the quarterly VWAP, it was changed from 620 to 919, okay? The quarterly VWAP was changed from 620, okay? 620 to 919, okay? Very, very, very important. All right. So let's hold on to that, okay? You can't see it here. It's just one day, but you'll start seeing it over the next week or two, okay? So those are the small cap stocks. Okay. Let's talk about the market right now, okay? So far we are down. And folks, I hate to say I told you so, but the market is just not look what happened last week every time. Look, I want to show you guys this real quick here. Every time we came up here last week when we came up here, right up here on the intraday, look right here, went right back down. Right here when we went and hit this area, I watched these intraday. Right here, it was right there. We went straight down. Every time we hit the 1.5 standard deviation band, and I don't even know why I don't have it here. I should have it here, but I have it at work. Um, I guess I gotta adjust this. It'll change. But every time we hit these levels, we tend to bounce down. Look at where we're at right now. We're already below the 8-day EMA on the SPY. So remember what I've been telling you last week. Remember what I was telling you all last week. We're getting overextended. Look at mega caps. I know a lot of you don't listen to me. Some of you do, but mega caps are getting overextended. How many times did I tell you we need to get back to the 8-day EMA? We need to get back to this level right here. This is way too much, way too much. We'll talk about this in a minute, but this just all goes into what I've been trying to tell you for the last few days. Good Eagle Beagle, good. So did not be does no. You don't need to do anything on ACP or Pro Trader dashboard. Those are day trading tools. Good question though, Ira. Good question. So as you can see here, we're negative across the board. Everything is negative, not just one thing. Okay. Bond market. Remember what I told you. We have to fill this gap and look at where we're at right now. If you look at this here on my, you can look at this right here. Remember, I told you we got to fill this gap and we got to fill this gap right here. We got to start filling some of these gaps. We're trading now below the 15-day EMA and we're squarely inside this gap right now. Here, maybe this will look a little more familiar to you. Remember this? Remember me drawing these lines right here and telling you the last thing I want to see is us fill this gap? I want to see the bond market trade higher. I don't think it will. Remember when I said last week, this is too much too fast, that we need to come down? Do you remember when I said last week that if this comes down, it will put pressure on the stock market? Everything I'm saying right now, I have said last week at least 10 times. Does anybody not remember me saying what I just said at least 10 times last week? That this is too much too fast. This is causing the stock market to get overextended. This needs to cool off. This gap gets filled. We're in deep shit. Do you guys remember any of that? Or was this just me talking to Clyde? Does anybody remember that? I showed you this example right here. I showed you how this gap right here, specifically two high volume bars, how we filled this gap. I told you how the bond market's peaking out, how buy the rumor, sell the fact. Remember this? I showed you this exact scenario right here. Do you guys remember? And then I told you how the mega caps are getting too ahead of themselves, how RSP is not breaking out of this range, how QQQE is now eating back everything it gained. Do you remember this? Okay. It wasn't that long ago, and I've been pretty vocal about it the last few days. I even told you how the number of stocks right here that was at 347, how I think it's going to go back into the 100s. This was all last week, like Thursday, Friday, Wednesday. Okay. Oh, there's a lot of yeses here. Yes, at least 10 times. Okay. Just want to make sure we're all on the same page. So you see that? We're in that zone right here. And that's not good. This is not good for the stock market, folks. I said here, oh, wait a minute. Look, I even drew this long. I totally didn't even see this just now. Here, I drew this for you last week to show you this here. I didn't just do it here. I didn't just do it over here like this. I actually physically drew a line for you right here. You guys were all there. You guys were all. It wasn't like a year ago. It was just 72 hours ago. Okay, so you see this how we gapped down. We couldn't fill this gap. The Fed data came in. We're now in this gap. If we continue filling this gap all the way down here, it's not going to be pretty. Okay. Um, Fed data. What Fed data do we have? We have Fed speakers today. We don't really have a lot of activity except for Fed speakers, and I'll get into catalysts in just a minute. US dollar. Remember I told you I don't think US dollar is going to go down after the Fed announcement? Well, we're right back in our range. And I told you that if the US dollar starts coming back in the range, it'll give gold some strength. Look at this. And again, I'm not doing the whole I told you this a year ago. I told you this like last Wednesday, Thursday, and Friday. How we're pulling back to the remember how I said how we're going to pull back to this level right here? And then we're going to come up again. Well, guess what? We pulled up to this level. We pulled up below the 8-day EMA, and now we're back up, and the US dollar's back in here. Isn't it interesting? Let me ask you, are there any surprises here for anybody that watches me every day? Is there any surprises here so far? Because I ain't getting any surprises here. There's no surprises here so far. Bitcoin. Now, here's a surprise. And I'm actually going to give you a catalyst for today. Bitcoin is a catalyst. It's breaking down. This is a major, major catalyst. It's also a catalyst in our report. And remember, my report comes at 8 o'clock. You guys get it later, so you have a better advantage. See, crypto. Remember I told you, again, do you remember I told you last week in great details, I told you that we're going to be watching Bitcoin right here, that we have an ascending triangle. And I told you that ascending triangle usually breaks up. And I told you that once we break through here, we're going to be watching chip stocks. Bitcoin crypto stocks very, very closely because this is a legitimate breakdown. And then at the same time, I also told you that if we break this level, this is the resistance, this is the support. I told you that we're going to have a shit show in cryptos. Well, we broke down this level and by the way, I drew this level for you about 2 weeks ago, 3 weeks ago. Again, this should not be a surprise here, okay? Do you guys remember this? Yeah. Do you remember the clean breakdown? And look at this. It's become a catalyst exactly as we said it would, just the other way. See, like cryptocurrency exposed stocks are moving lower with the price. Remember, I told you I don't trade crypto. Jeffrey Turnmeyer is a crypto guy. I'm more trading MSTR, Mara, Coinbase. So, and I told you that if this breaks out, we spent a lot of time on this. I told you that if this breaks above this line right here, the red line, 18,143, that was the level I gave you. I said we're going to have a positive catalyst. Well, I assumed we were going to break this way because everything seemed that way, but we broke out this way. It doesn't matter. We broke down instead of up. It becomes a catalyst just in a different direction. And again, I hate to say it, I told you so, but I told you all of this would happen just one way or the other, and we went the other way. So that's a negative catalyst. So I already gave you 2 catalysts for today. So we're kind of cheating in this game. I already told you Fed speakers, and I already told you Bitcoin, and I've already actually showed you the other ones, but that's okay. This is not a test. Crude oil. Now, right here, see how we've come to this area a few times? I want to see a hard breakdown of this area. I want to see a breakdown of this area. Okay. If we have a breakdown of this area, which is right around 6150, we're going to cool off. We're going to really cool off. Now we're making lower highs. Look. Do you see that? 1, 2, 3, 4. That's bearish. We're also below the 200-day moving average. The only saving grace is that we've been consolidating for a long time. Now, folks, this is a very long-term consolidations. The longer something consolidates, the better the odds that the breakout that will occur will be very strong. I don't know if we're going to break out to the upside or we're going to break down to the downside. As of right now, it looks like we're just consolidating. But I'm just giving you heads up that a breakout one way or the other, either through here, either above 66 or below 6150, should be pretty interesting. Okay, it should be pretty interesting. And I know Trump is allegedly doing everything he can to lower prices to put pressure on Mr. Vladimir, but so we'll see if that happens. But if, by the way, if crude oil does fall below 6150, it's going to be bad for Russia. Very bad for Russia. And bonds, by the way, are continuing to break down. By the way, look at the last 12 hours on bonds. Look at this. That's not a strong trend right here. That's that's Friday afternoon right here. Sorry. Right here. Look at that. That's not a nice clean trend right there. Okay, let's continue. Volatility. Remember what I told you in volatility? I said volatility starting to come here Friday. I also told you that volatility, I believe, has bottomed, and I believe that volatility is going to the upper end of this range. We're now back above the, let me just move this a little forward, and we're now back above. Remember I told you Friday when we were right here, I think we bottomed out, and I think we're going higher. Folks, I want to ask you a question. Do you remember me telling you exactly what was going to happen on gold, US dollar, the bond market, Bitcoin, crude oil, and now volatility? All right. Angie, we do till it's inconvenient for us. So you see how we're coming back up here? This is not bullish. All right. Why don't you guys give me all the catalysts and maybe let me see if I missed one. Hold on, let me see. I do tend to miss them sometimes because I do this early. Let's see if I missed one or not. That's a small cap. K-View, is K-View a large cap? Hold on. I don't even know what the stock does. I don't think this is going to be a catalyst, but let's see. Nope, not a. Oh, actually, yeah, consumer staples, perfume toilets. Okay, we're going to add another one. Consumer staples. See, just added a new one. Okay, give it to me. Let me have them. What are our catalysts? All right, Richard Feinberg. We got Ivano. We got Walt. Okay, let's see. John Short, Asian stock market. I didn't see anything crazy happening in the Asian stock market. Was there anything happening crazy? Hold on. Did I miss something? No, I didn't really see anything with Asia. Hey, Stoic, how are you? Good for you, Stoic. Okay, Fed speaker. Okay, let me ask you, what's going on with Japan? Is there something going on with Japan? I don't think they're making new highs. So I don't think anything's happening with Japan. I think you mean you mean China and Donald Trump. I think that already happened. We've already that already happened. And all right, well okay, you want to add that in, that we could do that. That's fine. So TikTok, Trump TikTok. Okay, fair enough. Bond market, yes. Chips, coin, yeah, coin and Mara are the same, John. KLAC, that's chips. Richard says chips, Apple, crypto. You've already said chips. Fed speakers. Richard says Fed speakers, Japan. I don't see Japan as being a catalyst. Bitcoin, definitely. MSTR, we've already said. Coin, we've already said. Carlos has. Fed speakers, Bitcoin, yes. Chips, yes. Fed National Activity Index, I would just say Fed. Well, here's what I've got. I got cryptos, chip, Fed speakers, consumer staples. Okay? That's what I got. And consumer staples was just recently because of K-View. So what I got was cryptos. Folks, if you have cryptos, you don't have to label them. Just say, look, I want to explain something to you guys. Let me explain this to you. The whole purpose The whole purpose of finding a catalyst is to find multiple things that are all going to contribute to one event. So if you're going to itemize Coin, Mara, then what you're saying is they have a separate influence on the market. They don't. Basically, cryptos are going to impact the market. So just say cryptos. If you're going to label the different chip stocks, you're going to assume that those chip stocks are going to have a different impact on the market. We're looking for the big stuff right here. We're looking for the 80-20 thing. We're looking for just the big catalyst. So chips, not which company, just chips, cryptos. See, you don't want to itemize. You want to include. You want to. This is the big picture, okay? So by labeling the companies differently, you're communicating to me that they may have a different catalyst. The key here is not to itemize. The key here is to group together to make the least amount of catalysts for yourself so you don't have to watch 50 different stocks. That's the purpose of this. So when you guys start itemizing it, you're doing the opposite of what I'm trying to get you guys to do. I'm just trying to get you to understand the logic here, okay? The principal point here is to group multiple stocks together into one catalyst, not to itemize those stocks, okay? So we know, for example, that chips, look, ASML and KLAC, they're both doing something. Chips are a catalyst today. That's it. Crypto is a catalyst today. You don't need to itemize all of this. I'm just, it's okay if you do, but you don't need to. The point of it is to combine, not to separate. Okay. Just again, I'm just trying to get you guys tightening this. You're doing a great job. And Richard, you've all done a great job. But like Julio just said, MSTR coin. MSTR and coin are the same catalyst. It's cryptos. Just say cryptos, chips. Do it the way I do it. Crypto chips, Fed speakers, consumer staples. Try to put them all into a package. Okay. Again, I'm just trying to be constructive criticism here. Okay. All right. All right. What's going on today? We're pointing to a slightly lower open on Wall Street as investors look for fresh catalyst. Yeah, good luck with that. Investors will focus on Federal Jerome Powell, other officials release gauge of inflation. This week, the big news is going to be we got durable good orders, we got PMI, we got new home sales, and this is going to be the big one. This is a revision. This GDP is a third revision, so it's not going to be as powerful, okay? This is going to be very powerful right here, personal income. And we're going to be looking at year over year, year over year. We don't care about month to month nonsense. We care about year over year. We care about the core PCE and the price index. These are the two things we care about, okay? Stop. So I avoid crypto and anything. Coin, I don't understand or want it. I prefer fintech energy. That's fine. No problem there. Okay. Investors will focus on that. We know that Friday, the Magnificent Seven were up in arms. Oracle climbed. Bloomberg reported the company was in talks with Meta for a cloud deal. Lennar Home, we made good money on this on a time spread. Minneapolis, Kashkari said on Friday he supports FOMC decision to cut interest rates and penciled in 2 more rate cuts this year. Governor Moran told CNBC his decision to dissent from fellow policymakers was based on his view that tariffs have not had a significant impact on inflation. I agree with him 100%. I actually agree with him 1,000% because what he's saying is 100% true. The problem is we have a dual problem. We have unemployment and inflation. It's not just one anymore. And that's the first time in history, in modern history, we've had that kind of problem. We have a 91% chance of a rate cut in October. I'm curious to see what the December figure is right now. A highly anticipated call on Friday between President Trump and Xi ended with both leaders agreeing to continue discussions. This was priced in on Friday already. This is not a catalyst anymore. Okay. August reading of the core personal consumption expenditure is the Fed's will be the main highlight. That's this report right here. Okay. Let's continue. Let's see how that Boxel is doing. Good for you. Good for you. Good for you. Good for you. Okay, let's continue. Oh, I see what the problem. Okay, that's what the problem. Okay, now I think I know what the problem is. Box L. Okay. All right. Okay. We'll go through these again. Good for you, Ringo. Good for you. Good for you. Box cell. Okay. Let's continue. Other newsworthy data, we have GDP. That's a third estimate, okay? It's not going to be that big. We got manufacturing. This is all going to take back seat to this report on Friday, okay? On Friday. Powell will deliver his speech tomorrow. That'll be interesting. We have a lot of interesting earnings this week, including Micron, AutoZone. This is one of the fastest growing stocks in history, by the way. AutoZone. Take a look at a chart of 30 years ago. You'll be shocked. Costco, ACN. Costco is going to be very impactful for retailers. Micron is going to be very impactful for chips. I'm not sure about ACN, and AutoZone will be impactful to retailers too, especially car retailers. Europe is down 0.62, starting the week on a downbeat. Auto stocks are declining. Luxury automakers cut their guidance in Europe. China ended higher, sentiment improved, and positive signal from high-level U.S. talks. Basically, nothing happened, but said he would meet Chinese 6 weeks, blah, 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 blah. Japan closed higher, rebounding from previous sessions' losses as concerns over Japanese plan to offload its massive hold exchange-rated funds eased. Electronic stocks led the gains on Monday. And I already told you about the catalyst. I'll talk about the small caps again, okay? I'll talk about them again. Okay, now I want to show you something, and I'm going to post this in the Telegram channel. I already told a few folks about it this morning. Now, folks, do you see this picture right here? I don't show it to you very often. I hold this from you very often because I don't want anyone to panic, and I don't want you reading nonsense. But I'm going to show you something right now. What you are seeing right now, here, I'm going to post this for you on YouTube, on Telegram. I'm just writing something for you. It tells us that bulls are getting a little too happy and okay, so I'm going to explain this to you. Most of you don't know what this is. And you shouldn't be buying anything, Michael, pre-market. Remember I told you do not buy anything pre-market? Do you guys remember I told you these small caps, the rules I'm giving you, they only work for after market opens? And somebody's asking, can I trade pre-open? You're not supposed to trade pre-open, Michael. If I wanted you to trade pre-open, I would tell you I want you to trade pre-open. Okay? All right, let's continue now. So, folks, I highly recommend you listen to me. Pay attention to what I'm telling you right now. This is really, really important. This is a ratio of puts to calls. I bust this out usually once a quarter, once every 6 months. Roger, how come you don't show us this chart every day? Because it's useless every day. It's only worth showing it to you when we get above this line or we get below this line. Do you see how we're below this line? What does this mean, Roger? What does this mean if we're below this line? It means call buyers are getting a little bit ahead of themselves. What happens in the market when call buyers get exuberant? You can have a switcherooski. What happens when put buyers get over exuberant? You get a switcherooski. Do you know what a switcherooski is? Is when you see the opposite happening. So whenever we see, so do you see when price gets down? You see what happens every time it gets here? It comes up. Do you see this? Do you see this with your own eyes? Do you see this? Do you see us being at a lower level than this in a long time? Do you think anybody else is going to show you this today? No. So look what happened 613. We came right to this level, and look what happened afterwards. Look what happened when we came here. Anything over 120 means put buyers are getting a little bit ahead of themselves. Anything below 70 tells us that call buyers are getting a little bit ahead of themselves. This is a reversion to the mean indicator. This is telling us that last week call buyers got a little bit too excited. You remember when I was telling you last week, we're in a danger zone. This is a trap. Don't buy here. We're going to cool off. We're getting overextended. Too many stocks are going above the 20-day moving average. We need to come cool off. Here's a price. The bonds are getting a little ahead of themselves. The stock market can't follow. You remember all that crap I told you last week about how the market is overextended? Well, here you go. Now, so I want you to tell me how often you see us coming here. And another thing I want you to know, how come Kramer, CNBC, and all of your favorite gurus are not talking about this today? Because considering that's the most important thing I'm going to show you today. Any questions? It's not how it works. That's not how it works, Jason. This is telling you that S&P 500, too many people are buying too many calls last week. And what happens when retail traders get a little too exuberant? The market flips on them. This is telling us that traders are getting a little too exuberant. And this confirms absolutely every word of what I was trying to tell you last week about mags getting overextended, the bonds market driving price to overextended areas, the stocks needed to cool off, and all of that stuff. So do you see what I'm seeing? Do you think the market has a lot of upside here? If you do, God bless you. Do you see us coming above this level very often? Roger, how come you don't use this all the time? Because unless it goes down here or up here, it's useless. You see it doesn't come here very often? You see we haven't been below this level very much? This was the last time I showed you this, 4 months ago. This is not a short-term indicator. This is the big daddy. This is institutional grade stuff. We're going to keep looking at it for another few minutes. Why? Because I need you guys to buy into this. Because this is really important stuff. Okay? So this means we need to snap back. Okay? Let's expand on that a little bit. Do you remember me telling you that there's only 50% of stocks trading or 44% of stocks trading above the NASDAQ 100? Do you remember me telling you that the RSP has not broken out yet? Do you remember me telling you that? Do you remember me telling you that mega caps here? Why isn't this cooperating with me? Here we go. Remember me telling you that this is a little overextended? Do you remember me being extra cautious with you last week, telling you how this needs to touch the 8-day EMA, has to come and fill this gap? You remember all that stuff I've been telling you for the last couple of weeks? Well, it all comes down to this. Also, we're finally have to the downside. Remember we had like 5, 10 stocks to the downside? 46, 45. 91. That's the highest number I've seen in a while. As a matter of fact, let's go back in time. Look at this number and look here. Just look here. 54, 79, 78, 103. Look, 62, 15, 94, 52, 47, 28, 41, 63, 54, 21, 28, 12, 13, 17, 5, 15, 21, 19, 26. I've gotten back to August 15 now. See how this number barely goes to 100? Just right here, right here. Look at where we're at today. We're at 91, and I think this is finally starting to get there. Point is, there's some good choicey stocks to the downside. This is a big problem right here. This is telling us that the market needs to cool off. Okay. RSP has not gone higher. Wait a minute. You're telling me that MAGs continue making all-time highs almost every single day here, and the equal weighted SPY is not? And QQQE is erasing that upside from last week. Look. See how we broke up and now we're back here. Look, see how we're not going higher? We're going to fill this gap right here, and we're going to come right back to the 8-day EMA. Okay? So we're overextended. We're overextended. And not only are we overextended, we're overextended. And let's see what sectors are leading. All right. This is looking really good, except for Bitcoin and home builders and mid caps, but this is looking pretty good. I'm expecting by the end of this week for this to start coming over here, unless there's a major catalyst that I'm not aware of. But I'm not. This right here is a huge red flag. Huge red flag. And notice I don't show you this every day. I show you this maybe 3 times a year because that's how you're supposed to use this. RSP did not break out last week. Look at MAGs. RSP is still here, right here. This entire run-up, RSP did not participate in. Look at the difference between the SPY and RSP right now. This needs to cool down and come back to this area right here. All of this needs to be erased. All of this needs to be erased, and we need to come right back here on the QQQ. See this right here? See this level right here I drew for you last week? Come on, baby. Here's the target, 591.96. Now, I want you to notice something. Am I expecting the market to crash? No. I'm just expecting this craziness to come back here. I think the market really looks like RSP. I don't think. I know the market looks like RSP right now. So we need this to come back here. We need this to come back here. We need QQQ. We need a pullback. We need a good, healthy pullback taking us right here. Okay? Folks, by the way, I forgot to tell you today, please, 1080p right here, not auto, 1080p. And if you don't mind, give us 1 thumbs up right here. I just gave myself 1 thumbs up. Okay? This is really important things that we're talking about, folks. Hey, G-Boss, how are you? Good to see you. We are due for a pullback, yes. But I'm explaining to you why we're due for a pullback. Volatility is not at the bottom anymore. It's coming up. QQQs are the RSP is not following along QQQs. The put to call ratio is grossly favoring. Here, take a close up. Favoring a pullback. So, and we're not really doing all that great today to start the day off with. And we don't have a major catalyst right now. The market's now looking for a catalyst. There is no major catalyst till this Friday. So, folks, I'm not loving what I am seeing. Let me just see something here. All right. I answered that question, TC. I literally just answered that question. I didn't just answer that question. I literally gave you a level on the QQQ 592 on the QQQ. On the SPY, I gave you these levels, so I think I'm being a little more specific than you in this case. Right here on the SPY, it would be 550.46, 550.46. On the mega caps, I'm being really specific here. Right here, 61.93. I don't think I can be any more specific, TC. Yeah, to 90. Yes, mags 90, 62 right here. We need to get somewhere around here, 62.30, basically to this level. Because look at QQQE. Hold on. Look at QQQE. I mean, look at RSP. They haven't moved. The only thing that's moving is mags, folks. Look at RSP. You could see it for yourself. This is how the rest of them should start looking. And by that time, this will be down to the 50-day. And no, I'm not kidding with you and I'm not playing around. Okay. So we have reasonable momentum to the upside. I'm expecting this number here. See how it's how Friday we were at 347? And I told you that on Friday we were right here. Coming into Friday, this is Thursday night. Coming into Friday, we were at 347. And I told you Friday, coming into Friday, I said, I believe this number is going to go into the 100s. Today, we're at 233. I believe this number is going to go into the 100s before the end of today, right after the opening. Remember I told you that on Friday morning, this is going to go back into, every time this goes into the 400s, it comes right back into the 100s. Now we're at 220. We went from 347 to 233. And I think in the next couple hours, this is going to be 150, 170. I'll show you. So TC, I literally gave you levels. I gave you the levels for the SPY. Now let's look intraday, okay? I know you guys love intraday stuff. Let's look intraday. There's no change in my levels at all. There's no change in my levels on the SPY. So let me just give that to you. I'll redraw all this next week. But for now, there's no change to the levels. Okay. Okay, those are the SPY levels. Let me do QQQ levels. Look at that. Look at that. It's pretty damn good, I got to say. Let me give you these levels. I'm going to adjust these later this week. Do all new levels for you guys. Let's do SMH levels. Yeah, we don't need to adjust anything here. Let me give you these levels. You know, I haven't even told you how I would trade today, but I will in a few minutes if you guys are patient with me. Here's SMH levels. And here is IWM. IWM levels. Let me give that to you. And I will be adjusting these this week. I'll probably do it live tomorrow. Okay, look at IWM. Everything needs to come back right here to 237.42, right around here. Okay, let's look at the small caps one more time, and then we'll look at the large caps, okay? I know, Rick, I gotta redo it. I gotta redo it this week. I'm gonna redo it tomorrow, okay? I'm gonna update them tomorrow. I want to wait till, I usually don't like to update them on Monday. I like to update them on Tuesday. I want Monday's price action to go. AGRI is above 1150. AGRI, here, I'm going to write this for you guys. AGRI above 1150. Beautiful, Bob. Thank you. I'll give the links again for today's session. Hold on. Box L, I have it at 770. It's already at 835. So the new level for this is going to be 870, 860, 870 here. Box L. 8 870 here. 870. Yeah, I know. You need less lines. I know. I'm gonna redo them. I'm gonna redo them tomorrow. I just want today's session to trade, and I'll redo them tomorrow. MBX. Yeah, this one is going crazy. This one, I marked it this morning at 1520. It's already at 28. So it is what it is. 28.30. MBX 28.30. QLGN 1350 or 1340. QLGN. Uh, Here, again, I'll do it again. Yeah, 1340. We'll do 1345. How about that? And last but not least, ARBB at 1070. ARBB 1070. Those are the levels for the small caps today, and those are the only small caps that are pudging. Now, let me give you my stocks, the large caps that I'm looking at. And folks, remember, this is not a joke. Again, look at how often we come here. Look, this is 3 years. I want to show you guys something. This is 3 years of data. How many times have we come here in 3 years? Do you see that? That's a 3-year low. Here, I'm going to post this for my guys. Let me post this for my team. Here. Okay, that's a big deal, folks. That's a big deal. No, you're not going to hear Kramer talking about it. You're not going to hear Kathy Woods talking about it. That's a big deal right there. That's a 3-year low right there. Okay? Maybe even further. I don't know. Let's go back. Yeah, it's a 3-year. No, we went lower than that like 4 years ago. That's a 3-year low right there. Yes, because it means there's going to be more pressure on puts. Puts are going to be more expensive. Calls are going to be cheaper. Here, I'm going to post this again for anybody here who thinks I'm joking around. Okay. I posted that for you too. Okay. Okay. Now let me give you stocks that we're looking at to the short side. Ball, Ball, Cart. This is Instacart. If economy slows down, it will hit Instacart. My wife loves Instacart. EQT. And I really wouldn't be focused too much on the intraday levels today, guys, that I gave you. I would be focused more on the big picture today. And the big picture is that put to call ratio. And that's for all the stocks on traded exchanges. It's for QQQ. Notice I didn't look at this. Notice this is here. This is equal weighted. See right here, this see this right here? Total put to call, not S&P 500 or NASDAQ. Total. This is the whole 9 yards. This is the entire stock market, okay? Okay. So let's continue. Sorry about that. EQT, that's my my third short. FIS, Fidelity National Service. This stock was on my short list once for like a year straight. Maybe again on my CARR daily, AFADS daily. AVWAP is only daily. Instacart, Bob, it's like Uber for food. Instacart is like Uber for food. They deliver food to your house. Yeah, they deliver groceries and stuff. My wife loves them. Ever since COVID, she's been addicted to Instacart. She Instacarts stuff all day long, like coffee, and it's a delivery service for food, Bob. It's like Uber for food. Colgate, Target. By the way, Target being on my short list is not a great thing for the economy. I'm just a little note. Target being on my short list is not a good look for the Target being on my short list and gold making new highs every day is not a great look for the market. Just FYI. Uh, FI, got to get out of here soon, or my boss is going to be upset at me. Clyde is not going to give me my Scooby snack for today. It's a nice pullback opportunity here. We may have a little more down. I would wait till we break down below 129.97. Once we do this, we'll be ready. But it looks great. FI and then cold, out in the cold. We don't want to be left out in the cold. They are, Chen. They sure are. I did. I put GBoss. I did, and I explained it. Hey guys, did I give you a good enough I posted this twice, short term and long term, once when we started and once afterwards. And I explained to you exactly what this means. That means that whenever you see this below 70, call buyers are getting a little too excited. And when we get above 96, preferably 120, put buyers are getting too excited. Call buyers are getting more excited than they've been in the last 3 years. And usually what happens to markets when retail traders get too excited? Flips on you. This is beautiful right here. This is a beautiful chart right here. This chart is not out in the cold. Okay, let's switch to longs. Tring. Let's switch to longs. BKR. BKR. Hood still is looking interesting. I love those fintech stocks. Zeta. And another reason why we're seeing this, folks, is because mags are getting way ahead of themselves. For example, this is Zeta. Apple's on my watch list. Look at Apple right now. Look at that. That's causing folks to get too uppity about the market. How about Google? That's also on my watch list. It's causing people to get too uppity about the market. This is 40% of the market, folks. It's distorting us. Tesla, too. So Apple and Google are on my long watch list, but please let me do my analysis before you go out buying these stocks. Halo, remember in the pit, I gave you this as a bonus stock last week. Look at that. Looks nice, doesn't it? We've been doing really good in our pit trades, by the way. Ask me about IBM later today, Sebastian, during the VIP room. I have something funny to say about IBM. Skyworks looks good. KGC. I almost thought this was KGB. This is a gold company, by the way, and I do like this company. It's nice. I would not be buying this here. I would be waiting for the 8-day, but just FYI. NBIS. Oops, NBIS. Hold on. Let me. NBIS. Looks very nice. And ABV. Beautiful stock. Again, a little overextended. Should probably come back right here. Basically, what I'm trying to tell you folks is this. So let me tell you, you want me to comment on Meta? Sure, why not? It is a mega cap. looks like it's coming right back down to the 15-day EMA. As the market made all-time highs, it wasn't able to do it, and now it's coming back down. I see the 50-day moving average in its forward-looking mirror in the very near term. And you could see right here, by the way, that even if it right here, right here. So if it's going to respect this trend, it's going to come down all the way here, but I believe it'll break it and come down to the 50-day. Okay. So next, before we continue, let me just review my pit trades from last week, last 2 weeks, and then we'll continue. And I'll give you my. So these are my pit trades from the last 2 weeks. As you could see here, Clyde was very, very excited. I didn't do it last week, so I figured I'll just do it for 2 weeks. So 2 weeks ago on a Monday, we bought Ross Store. We took a profit. We took an Amazon overnight. We took a profit on Amazon. We took Palantir on Wednesday. We took profit on Palantir. On Thursday, we took a bonus GNRC trade. This is the previous Thursday. We still have this trade as a bonus. Friday, we didn't do anything. Clyde had an underwater basket weaving appointment. Last week's on, so this is now last week. This is the week before last week. This is the 8th through the 12th. This is last week. We went long Amazon, and I gave you a Chewy straddle. We took a profit the next day on Amazon and Chewy straddle. I gave you a bonus on Halo. We took a profit on Halo. I gave you a VSAT. We took a profit on VSAT. I gave you Lennar. We took a profit on El Lennar on Friday, and we took SYM, and we closed out SYM, and we're still holding GNRC. That's the update from the pit. Any questions about the pit before I continue? No, nothing? Everything okay? Everybody's okay with the pit? Winner, 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 holding. Winner, 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 winner. Just holding that GNCR. That's it. Any questions about the pit before I continue? Okay. Links. Let me give you links, and then I'll give you my finale. Here's the VIP room link. For anybody who coming in here today, we are going to be talking about day trading today. There's the link. We're going to be talking about trading psychology, what the Trading Zone Live is and what we do there, what indicators we use and why they work, examples of setups used in Trading Zone Line, and how to trade with a small account if you don't have 25K, and market internals. We're going to talk about market internals today. And I think I asked Raleigh to remind me of something, so we're going to cover that as well. When you say go long, what's the mean stock or option? It's the most people do the options. I tell you which ones to do, Mark. I teach people what to do. I teach them. I explain all that. It's only 2 rules. If you're day trading 4 to 8 days out, if you're swing trading 3 to 4 weeks out, delta always 0.70. That's it. That's all you need to know. See how simple that was? And if it's a strangle or a straddle, I give you all the details. Our win rate in the pit has been over 70, 94. I think we're almost back at 95% over the last 400 trades and 400 bonus trades. Yes, we've been killing it. Also going to review A-Line and Stock. Oh, thank you, Raleigh. That's it. I'm going to review A-Line in StockFetcher. Yes, I wanted to give you a scanner review. I'll do a scanner review in StockFetcher. So here's the link for Customer Service Live. Don't forget, Cam and Gustavo show. If you are confused, they will unconfuse you. And folks, here's my email address, roger@rogerscott.com. Please email me anytime. Just no customer service questions. I am not qualified. I am the least qualified guy for customer service questions. Cam and Gustavo will do a much better job. Let's see what the indices are doing right now. Dow's negative 20. This was down 90. Now it's only down 70. The bond market is this is not good right here. This is not good. Hopefully this is a bottom and we'll start coming back up. We have almost, oh, by the way, look, we filled that gap. Look. Another 2 ticks and we would have completely filled that gap right here. We need to fill this one too. Unless something really changes, we're going to be filling this gap too. But we've officially almost like 3 ticks filled this gap. Remember when we were here? I was telling you we're going to fill this gap. We were here. I was telling you middle of last week how this is overextended. We're going to come here. It's going to push stocks down, and I'm watching this gap filled. And I was very specific about this gap right here. Okay, folks, if you haven't given us a thumbs up yet, please do. Please also subscribe to our channel so you get notified when we get a bell. So before I conclude, and I got to conclude right now, let me tell you what I'm expecting today. First of all, it's Monday. Mondays are typically consolidations. I don't do a lot on Mondays. If I do stuff on Mondays, it tends to be more towards the second half of the day. I looked at my journal, my trading journal over the last decade, and I found out that Mondays, when I put trades on Mondays early in the morning, they don't go as well as when I trade Monday second half of the day. So I'm not restricting it, but I'm extremely conscientious of not taking action Monday morning. I found out that taking action Monday afternoons has always done better for me. I don't like the market. I will be updating you throughout the day if my thesis is holding true or not. I want to be wrong. I don't want to be right. I'd rather we all make more money when the market goes up. Well, at least you guys do. You make more money when the market goes up. You guys are not the shorters. Most buy stocks, don't short stocks. I couldn't care less. But the point is, we may be getting a little ahead of ourselves. And we don't really have a major catalyst first part of this week, aside from international news with Trump, and nobody knows how that's going to go. That's a crapshoot right there. So I don't really, I'm not really that aggressive on stocks that have been going up the last couple of weeks. Gold stock, Bitcoin, crypto stocks, chip stocks, they're not looking that amazing right now. I would be very, very cautious. And folks, we are getting way ahead of ourselves. We're either going to see a sector rotation into smaller stocks, or we're going to see money coming out of the market. Also, keep your eye today on this right here. And I'll be keeping an eye on all of this for you. Right here, the 20-day breakouts. I want to see if this number gets into the 100s and starts coming out of it, or starts going back into the low 100s. And I want to see what happens with RSP, if the money starts coming into RSP or coming out of the market. If it comes out of the market, you're probably going to see a little more strength than you expect in the gold market, because cryptos are not in favor right now. So people are either going to put their money in cash or in gold, because bonds are not looking all that great either. So keep an eye on gold, RSP, and the relationship of the bond market and VIX. If you see VIX coming up here, that's a red flag. If ADD is going to be really negative at the open, that's going to be a red flag. Folks, I will be updating you on the free Telegram channel and on the premium Telegram channels all day long. I'm not going to be that busy today because it's Monday. I have my regular class and my webinar, but I'll be trading an entire day with you, okay? So let me give you those links again. Please be careful. Don't get FOMO right now. The most important thing is this. If you really like something right now, the odds are there will be a better time to buy it than this morning. I'm going to repeat that because what I just said is very important. If you like a stock this morning, especially for the long side, there's a really high chance that you're going to be able to buy it a little bit cheaper, okay? A little bit cheaper. I will be updating you on the put to call ratio, which doesn't really work well during market hours. Just by the way, it works well after market hours. It doesn't work well during market hours. This works really well during market hours. It's only 20 minutes delayed. So and VIX works really well. And again, if this starts coming up to 1750, it's not a good look. Thanks, everybody. Have a fantastic day. If there's anything I missed at all, you feel free to send me an email. Bye, everybody. Have a wonderful day. Please stay out of trouble. Please stay out of trouble. Do not let FOMO get in the way of you finding a good stock. Be patient. Nothing is running away with the circus right now. Okay? Bye. All right. And Carlos, thank you for the shirt. The money grows on charts. Always grows on charts. All right. Bye, everybody. Have a fantastic day. And thank you, Carlos, once again.